to 88 cents. That's where I got the 88 cents from. All right, the Waves platform's native token, Waves, also falling about 26% in the last 24 hours to $9. Meanwhile, the consumer price index accelerated about 8.3% in April, more than economists' expectations, remaining near the highest level in more than 4 decades, but still down from around 8.5% in March, according to a U.S. Labor Department report. Bitcoin was down about 5% within minutes after the report was released. And Coinbase hit with a $430 million loss in the first quarter with revenue. Earnings came in around $388 million, a lot lower than expected. The stock is down about 70% year to date. CEO Brian Armstrong also responding to new language found in the exchange's latest 10Q filing. Customers who custody their crypto with Coinbase will be treated as unsecured general creditors. In other words, the bottom of the list to get their money back if Coinbase were to go bankrupt. Armstrong saying Coinbase is not in danger of going bankrupt, however, and this filing is simply a new requirement of the U.S. Securities and Exchange Commission. All right, joining us now to discuss BTC price and more is CoinDesk markets reporter Damanick Dantes in New York. Hi, Damanick. So let's talk about what everyone's talking about. It's the Luna Foundation Guard. They're lending out and dumping their Bitcoin reserves in an attempt to save their stablecoin UST. So what is the impact that is having on Bitcoin in the markets?
It's creating some contagion risk. When there's instability in the market, any type of market, you always get this sort of panic selling and a lack of alternatives for safety. And stable coins are generally the safety mechanism in the crypto ecosystem. So when that safety mechanism is deteriorated, there is some sort of panic in the market. And we've been seeing that contribute to the selling pressure. Of course, you've got the macro risk and the high correlations creating some of the traditional influences impacting the crypto market. But on top of that, there is nowhere to hide. So that's definitely creating some stress throughout the crypto markets in general.
So where are we seeing Bitcoin's fear and greed index?
So fear and greed slipped to extreme fear territory on par with what we saw in January, which marked the low around January 24th. And that was also around the 30K mark. So we're seeing that as some support level. And you can see here, extreme fear was also evident around May of last year, which took a few months to sort of solidify that bottom. So it's not a particular or exact buy signal or sort of counter trend signal. It takes a while for the indicator to shake off those extreme fear sentiment readings. And we're coming off of extreme greed territory back around the November high. But if you see that chart, it's been sort of low for the past few months. So we've been in this fear zone consistently throughout. So it's going to take a while to see that sign of capitulation.
All right, so taking a look at what traders are doing and how they're hedging their bets, what can we see in the options market and the futures for Bitcoin?
Yeah, so the traders definitely, that's been a consistent theme throughout this year. I say it all the time. Downside protection has been the name of the game. And QCP Capital, which is a Singapore-based crypto trading firm, which I'm quoting today, Market Wrap, they've shown a high demand for puts on their options desk. So definitely traders are hedging against that downside risk. Particularly when you do that, you expect greater loss, right? And you want to sort of protect yourself. And we've been seeing that. So the Bitcoin put call ratio, which is just the volume of puts relative to the volume of calls, has accelerated up towards, I think, the March highs. So you're definitely seeing that reverse, which shows the bearish sentiment overwhelming the bullish sentiment.
All right, so usually when there's a lot of pressure in the markets, there's a flight to safety. And in this case, in the crypto markets, it's usually Bitcoin, digital gold. So how is BTC dominance doing relative to the alts?
Yeah, so it's not necessarily a flight because Bitcoin is not taking in any inflows from this sell-off. It's just declining less than the altcoins. So folks are just distributing out of their altcoins. And typically what you see is they distribute out of that into the stable coins. That's not the case this time. I think, there's definitely, that's contributing to the fear at most. So there's definitely been an outflow of profits or any type of cash. Right now, the Bitcoin dominance ratio has ticked higher. So that shows that Bitcoin has been declining less than the altcoins. So altcoins have higher beta or higher risk in the market. So typically they tend to decline less or decline more in a down market. And the opposite is true in a rising market.
And where do you see Bitcoin stabilizing at what price level?
Right now, it's trying to stabilize around 30K, but it's a support level that has gone back. It's the bottom of the year-long price range, which we've been stuck at for a while. However, momentum signals, as I've consistently mentioned, have been negative on all the charts, daily, weekly, and monthly charts. So that increases the risk of a breakdown below 30K. And 27K is that next support line that folks are looking at. And here it just shows the on-chain data. So the average realized price, which is the average cost basis among crypto holders, Bitcoin holders to be specific, is around 24.3K. And that realized price has consistently been a reliable gauge of support over the long term. It tends to either precede a long range period like what we saw between 2014 and 2017, or a strong up push in price. So 24.3K would be that next on-chain cost basis. And technically, if we break below 27K, my work shows 17.8, which is a fairly steep decline, which will put you on par with the 80% or so drawdown that we saw in 2018. That pretty much stabilizes the low in a bear market. So things can get pretty ugly, but for the short term at least, you can see some stabilization or a relief rally.
We have one last chart of yours, and where do you see support and resistance in all this?
So that's a chart that shows that range around 29 to 30K, that lower end of the range. That's a critical support level. We saw that stabilize around the June, July lows, but you got to remember in the monthly chart around then, you were still pretty much within a strong momentum, although deteriorating over the past few months. Now that momentum over the long term has shifted negative. So it shows that any relief rally will be very, very limited. And if we break that, there's not much support to hold the cryptocurrency up. So 17.8 would be that natural next level of downside stabilization.
All right, Damanick, thanks for your insights. Appreciate you coming on the show. That was CoinDesk Markets reporter Damanick Dantes. Next up, we'll check in with crypto exchange Mara and how they're spreading crypto adoption across the African continent. Welcome back. Pan-African centralized crypto exchange Mara raising $23 million in a funding round led by Coinbase Ventures, Alameda Research, and others. Mara plans to invest in a suite of products targeting Nigeria and Kenya, Africa's two largest countries, before expanding to East Africa and Francophone countries. Joining us now to discuss is Mara CEO Nnandi. Hello there, Chi. Thank you for joining us. So congratulations on this raise. What do you see your exchange spending on with this new capital on first? Oh, I think you might be on mute.
Hello?
Oh, there you are. Oh, but you're frozen. Okay. Try it now.
Okay, hello?
Yes, we got you.
Okay, good. So we're here.
All right. It's tough to get a good internet connection in Africa, apparently, but if we can get Chi back, that would be great. All right. In the meantime, we'll try to fix up those issues. In the meantime, we'll end it there. That's it for All About Bitcoin. I'm here with Christine Lee. We'll do it all over again tomorrow at 3 o'clock in New York. Also, join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.